Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of March 11th through March 15th, where we'll see that the markets spring forward too, and we'll talk about how we can make money trading when the markets spring forward too. So let's get started. Here's our Google document with our notes for part one of our weekly trading game plan for March 11th through March 15th. We keep our notes in publicly available Google documents, so you can refer back to the notes for this week as well as previous weeks. You can find a direct link to these notes in the description box below. Our notes contain links to bonus video, the tools and resources we use to do our market analysis, our trading strategies, trade ideas, etc. Just a quick reminder, and the part of the basis for the theme for this week is please remember to set your clocks forward 1 hour tonight, spring forward tonight for daylight savings, assuming that your country or state observes daylight savings. Just a reminder, we keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder. So again, you can refer back to the notes for this week as well as previous weeks, and you can find a direct link to that Google Drive folder in the description box below. Welcome Douglas PC, Brian Moritz, Ricky Khan. Thank you all for joining us in the chat today. Hope you're having a great week. So first we'll look at how the markets ended up on Friday in FinBiz. So we can see we had a little bit of a sell-off into Friday, profit taking, more so in the NASDAQ. So the NASDAQ was down 1.16%, Dow was down slightly 0.18%, S&P down 0.65%. Again, profit taking after a pretty exuberantly strong run that we've had for several weeks. See advancing only 44.5%, declining 51%, although 92% made new highs, only 7% new lows. We still got 67% above their 50-day moving average, 32% below, 68% above their 200-day moving average, 32% below. And again, although this shows bearish, again, Friday, again, a lot of profit taking in the technology, Magnificent Seven. Again, we can see a lot of profit taking rotation out of Magnificent Seven after, a pretty exuberant run that we've seen for quite some time. Welcome, Logan Flips. Thank you for joining us. Some quick news. Mnuchin betting regulators don't want NCB to become another SVB, so he's trying to save NYCB after its troubles. This was interesting. Australian farmers are ripping out their vines. There's a wine glut. That was interesting. This isn't a bull market. It's a duck market. You can hear about that. Powell isn't scaring anyone. Market gain broaden. Indexes end lower after payroll gains. Top forecast. Unemployment ticks up. I don't think really that jobs data had much of an impact. I think it was mostly profit taking. And NASDAQ drops as NVIDIA tumbles, again, profit taking after it was making, new record highs most of the week. So again, in general, the market sprang forward. Friday was just profit taking. Saw oil get rejected off that $80 mark again, bounced down slightly. Natural gas got rejected off $2, bounced down slightly. We'll see if it pops back up to retest, and we'll see in the futures gold's had just a exuberant run and continues. Now it's up at 2186 all-time highs. We see the futures and all the indices are currently pointing down. DXY actually did break down below 104. It's now in the 103s, may have even gone into the 102s briefly. We saw bond yields retreat quite a bit, down from 4.3 down to almost 4.0. And we'll see in the futures that the short end of the curve had more dramatic moves than the longer end of the curve. So this curve's starting to steepen, and I think that's interesting. Welcome to Crow. Thank you for joining us. Hope you're doing well. So we'll look at the indices and then the technology components. Again, just a reminder, you can access these screeners directly in the notes or also in the screeners tab in our ETFs and Watchlist Google Sheets. So we can see all the indices are pretty much riding the top upper trend line of their current trend. Trends are all up, a lot of strength. Russell briefly broke out of that upward trend and then retreated, got rejected. Again, even the Russells, showing some strength on an upward trend. Q's definitely a strong upward trend. We see this upward channel, and it's just bouncing between that support and resistance line. Again, I expect that chop in the Qs and technology to continue. So very short term chop back and forth. SPY, you can see it's riding above that upper trend line, so that trend line is providing support. So again, markets are definitely springing forward and definitely a strong upward trend. Again, as we'll discuss, I don't see any catalysts. I know there's a lot of people publishing, crash, market's going down, get into cash. I don't follow that thesis. Again, I don't see a whole lot of reason for a major downtrend. We're going to get corrections. We're going to get retracements. But again, I don't see any thesis for a crash anytime soon. It would take in my humble opinion, it's going to take a black swan event to cause a major crash in the markets. And by definition, a black swan event is something that's not predictable. So we can't predict when that's going to happen, what's going to cause it. Again, by definition, a black swan event is something that we can't predict. So again, just a reminder, not financial advice. I'm not a financial advisor. All of our content should be considered for education and entertainment purposes only, and hopefully somewhat entertaining, although I know I'm not as excitable and exciting and entertaining as some. And I appreciate you all for watching and participating. And welcome Ellen Krantz, Walter Lyons, MD, Easy Mike. Thank you all for joining us today. Hope you all are doing well. So if we look at the technology components, again, as we've seen, ARK really isn't participating as strongly. It's just kind of chopping around in that narrowing triangle, narrowing wedge pattern. Again, not participating in the exuberant rally in technology as much. At some point, we could discuss my thesis on why that's so, but I won't spend time now. Again, we see the fangs are testing that upper trend line, getting rejected, bouncing down. Again, even though we saw that sell-off in the Magnificent Seven on Friday, which could continue for a day or two, the buy the dippers in the Magnificent Seven and in the mega cap techs are very strong. I expect every dip to eventually be bought back up. So I expect this type of trend where it's testing that upper trend line, making new highs, retracing, correcting briefly to continue. See, semiconductors had an exuberant run. Again, NVIDIA, AMD. Again, then we had that, pretty dramatic retracement, not to be unexpected. When we get these overly exuberant runs, we're going to get a correction, a retracement, profit taking. But again, very strong positive trend. So I expect that upward trend to continue. A lot of, good short-term trading opportunities in the volatility if you're nimble and brave enough to take those opportunities. Again, NASDAQ as a whole, very similar to the FANGs, being driven mostly by the Magnificent Seven. So we see it's bouncing between that support and resistance line, testing that upper resistance line, and I expect again that chop in general and the Qs to continue that way. Broad technology, very similar, but a little not quite as strong. We're not getting as strong of an exuberant run, and we may get a top in the overall broad technology sector. So again, lots of short-term trading opportunities. So again, the long-term trend in technologies up in general. Biotech, not so much. It had a big pop on the GLP-1 news, etc. But then we could see it's retracing, probably get a gap fill in there. And again, it's not getting the overall exuberant run, although the overall trend is upward. Again, being driven mostly by technology, mostly by the GLP-1s. So as the new news, better drugs keep coming out in that sector, that will cause pops in the biotech sector. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. Nagam, glad to see you as well. Okay, let's look at the groups, sectors, industries from last week. So we'll go to the groups tab. Again, Friday, we saw a lot of profit taking in technology. So technology very red, a little bit of a defensive move. So rotation into real estate, utilities, financials, and out of consumer cyclical and technology. For the week, again, rotation into some defensives, utilities, basic materials, real estate. Again, technology somewhat weak, consumer cyclical weak. So again, we're slowly seeing some broadening, some rotation out of just everything in tech. Again, some broadening, some diversity. For the month, again, more defensive sectors. So even though we're seeing, the indices are being driven by the Magnificent Seven, the mega cap techs, the broader market is getting a little more defensive, rotating into the beaten down sectors, utilities, real estate, financials, basic materials. We'll see the big run in gold, recovery in silver. So for the quarter, though, technology is still the overall winner. Industries from Friday. Again, we see some recovery in some of the REITs, industrial REITs. Some of the industrial REITs are doing quite well. Again, we saw bond yields decline, so some of the residential did a little bit better. Solar was positive. Copper rebounded. We'll see that. Gold slightly positive. Silver, I know was high up there at one time. Worst sectors, saw a correction, retracement in uranium. I just thought I'd mention this as I was looking at this in detail. Looked at several of these stocks to see if there was some opportunity in uranium. We see we got that rejection off that upper trend line. All these stocks look like many of them got support. So, EU's got support, DNN down at its lower trend line. CCJ bounced off its support level. EUC is sitting at a support level. UROI, I did look at UROI in some detail. I'd kind of like that lower, but it is at a previous low. And UUUU, although they're losing money, and so I wasn't. Although it does look like it's close to support, they lost money in their last reporting. So more focusing on UROI. Again, DNN still relatively high. You can see LEU drop below its support level. It's got some room to drop. So I'm keeping an eye on the uranium sector. Again, if you're a short-term trader, you'd like to take these opportunities in some of these uranium stocks that are bouncing off their support level. I think there's some short-term opportunities, and I'm going to keep an eye on that sector for some longer-term swing opportunities. So I thought I'd point that out. I know there's several BeachBum traders who do make money trading uranium. Silver was the silver sector shows slightly negative there, but for the week, we see silver was the top performer, gold very high up there, precious metal miners, copper, etc. So again, driven by that, strong run in gold. So again, rotation into basic materials, coal, some larger banks, recovery, oil. Again, we saw oil bounce off 80. So for the week, again, uranium's kind of near the bottom, some electronics, autos, some retailers. But for the month, semiconductors, utilities, silver, And again, uranium. So again, we saw that rollover retracement in uranium. Again, I think there's some short-term opportunities. If that downtrend continues, we're going to start looking at some of the uranium stocks that we like. Again, DNN, UROI, not so much UUUU, LEU, etc. Okay, I'll bring up the economic data calendar in investing.com. And I'll go over some of the highlights. I took some notes from Powell's testimony in front of the House and Senate Finance Committees, as well as some notes from the economic data that came out this past week. Also, just a quick reminder, as this important economic data comes out, I try to post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord is free to join. You can find a free invite to our Discord in the description box below, and we would love to have you join our Discord, participate in the active conversations, which we can do 24/7. So as you can see, I try to snapshot the important economic data out of investing.com as quickly as possible, both a snapshot image and the text data, and post that as quickly as possible in the Surf the Markets channel in our Discord. So again, encourage you to join our Discord, get as real-time economic data as possible via our Discord. So let me grab a quick drink and I'll go over my notes from the economic data, and we'll talk about what's upcoming in the next week. Okay, I didn't have a lot of notes from Monday, Tuesdays, and Wednesday. We got the Powell testimony in front of the House. They released the statement from his testimony early, and I captured these postings from Walter Bloomberg. So it's pretty much the same message as they've been sending. I didn't think there was anything new in either the House or Senate testimony. Likely appropriate to cut rates at some point this year. Need more confidence on inflation to cut. We do not expect it will be appropriate to reduce policy rate until we get greater confidence in inflation moving sustainable towards 2%. Likely be appropriate to begin dialing back policy restraint at some point this year. Risks to both cutting rates too early and too fast, as well as too late or too little. So again, they're going to be data dependent. They want to see more data to be confident. They're not going to change their 2% target. They are going to cut rates sometime this year. Again, I'll throw out my opinion that I've iterated before. I think unless something changes and we get unexpected data, I think we'll get a small cut sometime this summer, likely June, July, potentially. Again, I think they want to be able to appear non-political. Therefore, I don't expect significant rate cuts near the election. So we might get 2 rate cuts, one in the summer, one after Jackson Hole, maybe in September, and then maybe one after the election. I know the market's now pricing in 3 to 4, so it's adjusted down from the 6 or 7, which was delusional. So again, that's my opinion, my expectation. So I hope that helps. And again, I'd love to hear your opinion. What do you think? When do you think we'll get cuts? How big? How many? So again, they talked a lot about the Basel III banking regulations. They talked about housing. Again, I didn't think there was a whole lot other significance in the questions that they answered. And I won't make a lot of other political comments. I try to avoid that, but that's all I'll say for now. So Thursday, we got job cuts data. So job cuts was positive. It was more job cuts than expected. As we've seen, a lot of these are coming out of the technology sector. We got continuing jobless claims was higher than expected. So, people are having a little bit harder time finding jobs. Initial claims was pretty much in line. And then we also saw, well, we'll talk about that with the jobs data that came out on Friday. So again, job market just very slowly weakening, not significant. Productivity was up slightly. That's a positive. And that's positive for the economy in general. Labor cost was up less than expected. So again, that's a positive in terms of inflation. Again, I didn't hear anything, different, new in Powell's Senate testimony. Then Friday, we got jobs data, again, caused some volatility. So the non-farm payrolls was up more than expected, but there were also some revisions to the previous months that were brought it down. So we'll see if this gets revised down further. Participation rate not changing. Overall unemployment, the U6, so the U6 is just slightly up. The unemployment rate in general is 3.9%. So again, we see this very gradual weakening of the job market. Average hourly earnings were up less than expected. So again, this wage price spiral threat risk is weakening. So again, positive in terms of a cut, the potential for a cut coming, but not anytime soon. Again, they don't have any urgent reason to have to cut anytime soon. So I'll go over the other economic data from past week very quickly in a minute, and then we'll look at economic data for next week, just some highlights. We've got CPI data on Tuesday, PPI data on Thursday, as well as jobless claims data and retail sales on Thursday. So Tuesday, Thursday are probably going to be the most important and most volatile in terms of economic data. Also got Michigan consumer sentiment on Friday, so that's also had more of an influence on the market than in the past. And also Friday is the March options expiration date, so March OPEX is on Friday. So again, some volatility Tuesday, Thursday, Friday probably. So let me grab a drink and we'll quickly review other economic data from last week and see if there's anything else upcoming for the next week. Yeah, MD, and that's going to be the talking point going into Monday, is that comment by Biden at his fundraiser or whatever, some election campaign event about him betting that there's going to be rate cuts. So yeah, that's going to be the big talking point on Monday, and that may, cause a shift in the probability of the rate cuts, in the Fed Watch tool, etc. So bond auctions look okay Monday. Durable goods, factory orders down more than expected. So again, but non-manufacturing activity was okay. Employment down a little bit. Still got Fed speakers talking. Crude oil stocks up, but less than expected. Mortgage rates ticked down slightly. Applications ticked up. So again, as mortgage rates go down, we'll see a wave of mortgage applications quickly. We talked about non-farm employment. ADP was up, but less than expected. JOLTS higher than expected. So there's still plenty of job openings. So one of the dichotomies they were talking about is we have all these job openings, and yet there's more people unemployed. So where's the disconnect? The dichotomy in that. Crude oil inventories up less than expected. Again, job cuts. So there are layoffs, again, mostly in the tech sector, I believe. Like service sector still underemployed. Talked about jobless claims. Natural gas storage down, but less than expected. We'll see the trend in natural gas is still up, but a lot of volatility, a lot of retracements. Talked about the jobs data. Baker Hughes, so oil rig count dropped slightly. Again, oil seems to be having difficulty breaking that $80 mark, even though we're getting continuing turmoil in the Gulf region. Total rig count drop, so rig counts are dropping, trying to hold that oil price up. So look at the data for next week. So we talked about core CPI data on Tuesday. Mortgage data, typical mortgage, typical oil and natural gas reporting. And Thursday we got PPI, jobless claims data, retail sales data for February. So that'll be mostly Valentine's Day. So you can expect those companies that have retail operations related to Valentine's will probably do well. Others, I think, are probably going to slow down. And Friday, again, we get Michigan sentiment data. The inflation expectations and overall sentiment will be, and people will be looking closely at that and see if it comes out significantly different than previous or expected. So still got earnings. Earnings season's winding down. There's still a lot of smaller companies reporting earnings. I don't know of anything significant offhand. There's Oracle, so technology, Oracle, cloud related, some banks, biotechs, etc. So you can look through the list. Again, there's several places. Benzinga, Earnings Whispers. I put out nice graphics with the major earnings, but again, it's worthwhile to know who's reporting, what impact that might have on stocks you're watching, stocks you own, etc. As we've seen, anybody that misses can get punished. Expectations are very high, so if they miss expectations, even if they beat on earnings, etc., expectations are very high. So it's whether they miss the market's expectations in terms of earnings growth, etc., forecast, and if they miss it all, they're going to be severely punished. If they beat, raise, then they could get significantly rewarded. Again, reminder, the next FOMC meeting is March 19th and 20th. We'll get a new SEP, so a dot plot. We'll see when does the Fed expect their cuts to appear when we get that SEP. And we talked about earnings. Again, you can hear our thesis on how to trade around earnings in this video via the link in our notes. Let me grab a drink and we'll go look at the market screen in Webull. Good morning, John. Thank you for joining us. Just a quick reminder, if you're not already using Webull, you can still get up to 75 free fractional shares of stock by opening and funding your account with 25K or more. If you fund your account with less than 25K, you get 20 free fractional shares of stock, each worth $3,000 to $3,000. So if you'd open your account with our affiliate link in the description box below, we would appreciate it. You can also get your free fractional shares of stock and help support our BeachBum trading community, which we greatly appreciate. John's asking if we're still on land, and yes, we're still on land. We can talk about that in more detail tomorrow if you'd like. Talk about some of the other REITs, etc., that we're interested in. Okay, this is the market screen on the online browser version of Webull. I like to use this for our market analysis. We can see on Friday, even though we had those declines in the indices, the advancers decliners histogram is pretty balanced. So again, mostly driven by the indexes are being driven by the Magnificent Seven, in my humble opinion. So we can see markets, pretty broadly stable. So we had quite a few advancers, small degree of advancement. The degree of decline was small. As we've seen typically on Friday for quite some time, we see this inflow in the NYSE early on Friday, and then we see this steady outflow out of the NASDAQ on Friday. So again, typical pattern that we've been seeing is profit taking on Friday, particularly out of the Magnificent Seven. So it might be a trend, that you might be able to profit off of again on Friday when we've had these exuberant run in the tech and Magnificent Seven. Very often on Friday we see profit taking. So again, you can see the near-term earnings calendar in Webull. You just click on the earnings under the calendar section. You could see who's upcoming in the very near term. You can see the heat map. Again, relatively new feature in Webull. I want to look at the best performing industries for the week. So we see, even though technology was pretty weak, semiconductors basically driven by NVIDIA, some AMD, very strong. Finance recovery, again, we saw metals mining driven by gold primarily. Coal had a recovery, so there's Archer. BTU, oil and gas in general were positive. Software, hardware, generally positive. REITs had a recovery. Renewable energy. Healthcare somewhat. Construction. Electrical, again, we saw that recovery in utilities. So we have several utilities, a little bit of pharmaceuticals, very focused on those with GLP-1 drugs. Natural gas utilities positive. Oil and gas, again, even though uranium, we saw that retracement, it ended up positive for the week. Okay, ETFs. So down on the Qs, down on the S&P, down on the Dow. So this is all from Friday. So again, Friday, negative sentiment, profit taking. So down on the S&P, down on the NASDAQ, up on the VIX. So as we'll see in the futures, VIX now, I think it's in the 14s. It popped up into the 15s. We'll see we're getting a very slow trend upward in volatility. That's the yen, YCO. We'll talk about that. The Nikkei, we'll look at the Nikkei and the yen. Short on the Russell, short on small caps. Industries. Industrials pretty negative in general. Although we've seen a big, run in the XLI, the industrial sector, so maybe some profit taking there. financial recovery, real estate recovery, some energy. Again, utilities bouncing back. Again, utilities like the idea of rate cuts. So the more we hear about rate cuts, the better for utilities. Technology generally negative. This is showing materials as negative overall. Cyclicals negative. Defensives pretty split. We'll talk about wheat. So we got a bounce in wheat, and we'll talk about that. I missed that bounce just briefly on Friday, but it looks like, there's a bottom. Reached a bottom. We'll see if we get a slight retest of that bottom, but it did bounce back up. I missed that bounce on Friday. Again, we'll talk about that in more detail tomorrow. Some agriculture, China. Currencies, bonds. So let's go look at those in the futures. So again, in the futures, let's see the Dow's kind of flat in terms of the futures. So I don't really think it's going to downtrend roll over, but I think consolidation, kind of lateral movement in the Dow would be expected. See the S&P upward trending, NASDAQ upward trending, Russell upward trending. So again, I think the Dow might have run out of some steam, might trade sideways for a while. I think it's got plenty of support. But the other indices, we see that, strong, they're springing forward, upward trend. Again, I don't see any reason for that trend to reverse. We're going to get corrections, retracements, but the strong upward trends. And again, I don't see that reversing anytime soon. So again, these premonitions of crashes, I think, in my humble opinion, are overblown. Again, not financial advice. That's just my opinion. So in general, again, we've seen the foreign markets pretty much following that exuberant trend, even though we've got, European countries in recession, Germany in recession, UK in recession. I think these markets are just pretty much following the trend of the US markets. So we see the DAX strong uptrend, Euro stock strong uptrend. Nikkei is the one I wanted to point out. And again, we've been having some discussion in our Discord with Easy Mike. I know Easy Mike has some personal experience working in Japan, has great knowledge about the Japanese market. So I recommend listening to what he has to say. But I saw this, it looked like it was topping and rolling over. So I'll point this out, and then we'll look at the yen, which is the inverse of the Nikkei. So it looks like it's topped and rolled over. Again, if I go to the bottom and I look at the yen, again, these look like they're inverses of one another. So it looks like they're pretty directly correlated right now. And when the Nikkei rolls over, the yen pops up, or when the yen pops up, the Nikkei has a tendency to roll over. I did also see some news, and Easy Mike, did you see that news about the BOJ thinking about removing or easing their bond yield control? So we'll see what impact that has on the Nikkei and the YCL, the yen. So if you caught that rollover, you'll see tomorrow we did add those to our watch list during this week, or to our bullpen in the middle of this week, when I saw that potential rollover, and possibly some of our BeachBum traders caught that and are already in profit based on those rollovers. So again, we see the VIX is very slowly trending up, making higher lows. It did pop up over 15, but it's always retraced rather quickly. So again, if you want to If you're nimble and want to trade that retracement, like with SBXY, there's money-making opportunities on this because so far the VIX just hasn't held any pops that we've seen anytime soon. And again, unless we get some kind of black swan, volatility trending slowly upward, but I don't see any major pops. So again, we see oil, it's getting rejected off 80, upwardly trending. I think it'll continue to test 80 until we get some other event to cause a pop over 80. Okay, natural gas got rejected off of $2, retracing. Looks like it may be establishing a bottom again, probably retest 2. It'll have to, break 2, and then, we got some potential upside, and we'll talk about that again tomorrow. You can trade it up, and we see in our ETFs Google Sheet trade natural gas long with oil, short with cold. See that, exuberant run in gold, so it broke the 2000 mark, broke 2050, and then had this super exuberant run, making new all-time highs. I heard there was discussion on Kramer last night about gold. How high could it go? They're talking like 2,600. So we'll see when that breaks. Again, if you're nimble, we have ETFs to short gold in our Google Sheet. You'll see they tend to be lagging the spot, the futures prices. So we'd watch those for opportunities using our ETF Google Sheet, and I'll point those out in a few minutes. Again, silver needs to test 25. Looks like it didn't quite make it, got rejected slightly, but again, got a pretty good catch-up trade between silver gold, so that ratio is expanding with that big run in gold. So again, in my humble opinion, I think the upside opportunity in silver is stronger, along with AGQ is our preference, and you can see other ETFs to trade silver in our ETF Google Sheet. See copper bounced up, retraced slightly. All the other metals, palladium popped up, retraced, platinum, corn, bounced, made a bottom, bounced up. Looks like it's trending back up. Wheat's the one we're looking at. We're looking to trade with WAT. I tried to catch that on Friday. I missed the bottom, and we'll look at that in more detail tomorrow. But again, then it popped up, and so it's up off that bottom. We'll see if we can catch just another retest of that bottom early next week. Lumber running high. Sugars come down some. Cocoa's still high. The bonds, again, this was interesting. The yields down, prices up, but you see the short end of the curve. We had much more of a dramatic adjustment in yields and prices on the short end of the curve, and less so on the longer end of the curve. So again, get some steepening of that curve. See the dollar rolled over. Now it's below 103. So that's good for all your dollar denominated commodities. This was kind of interesting for a while as we saw the dollar was 103, 104, and the commodities weren't really behaving. They weren't highly correlated with the dollar as they had been in the past. Same with the markets. Typically, a weaker U.S. dollar is good for the market. Strong is bad, but there didn't seem to be as strong a correlation as we saw the dollar was strong and the markets were still exuberantly running. We talked about the yen. See, the pound had a big run. So I hope that all helps. That's a good question, Alan. Who is buying all the gold? I think it's foreign central banks. Why are they buying it? I won't speculate right now, but that's an interesting discussion and an interesting question. I do have some speculative theories, but again, I won't go into those in detail right now. Okay, so we'll go into our ETF Google Sheet, look for ETFs that we can trade some of those opportunities that we've identified Just a quick reminder, you can get 24/7 access to this ETF Google Sheet as well as our dividend payers and our options trading Google Sheets by joining our Patreon at the All Access or VIP level. Again, we use this Google Sheet once we identify a potential opportunity. Then we go to our ETF Google Sheet and see what ETFs are available to long or short take advantage of those opportunities. So let me grab a quick drink. I do have quite a few additions that we've done research on that I'd like to go over those additions to our ETF Google Sheet and do a little bit of a quick take due diligence on each of those. So just a sec. Welcome, Wisdom. Glad you could join us. Glad to see you here. Thank you. Okay, the first one I want to look at is one that Easy Mike mentioned. This is PPH. It's a long on pharmaceuticals, Vanek Pharmaceuticals ETF. So thank you again, Easy Mike, for pointing out PPH to us. So again, you can find our research on all of these in the research sheet of our Google Sheet. So I'll go to the research tab. This is where I can do the analysis of any new, or you can as well. You can always make a copy of this Google Sheet and you can use it to research the risk reward profiles, etc., of any ETF. So here's PPH, Vanex Pharmaceuticals. I will bring up the FinBiz chart for this, which again you can access via the link in the FinBiz column. So we'll take a quick look at the FinBiz chart. So you can see it's running very high. So it's had a nice run. If you caught it down here, you've made a nice profit. Does pay a dividend. Looks like it's about a 30-cent quarterly dividend. It is optionable. See the performance, 21% for the year. So again, had a nice positive run. Again, on the new features in FinBiz, you can now see a breakdown of the holdings for an ETF right here in FinBiz, and also the top 10 holdings. So we can see, okay, Lilly, Novo Nordisk, J&J, AbbVie, Merck, etc. So I'm sure this has been primarily driven by the GLP-1s. So this is, mostly McKesson, AstraZeneca, etc. So you can see the weightings, very heavy in Lilly, Novo Nordisk. So again, GLP-1s. So again, very nice positive run. We zoom out again, very, very high. Again, it's, at pretty much at all-time highs. So, if you caught it at one of these bottom dips, that's great. But at this point, it's running very high. So could it continue to run up? Sure. But at some point, we'll probably see some cooling off in that trend and some level of correction. So again, you can see the overall risk reward profile for this in our research tab. So you can see, it's had a 24% rise. Again, it's very close to its 52-week high. Again, not something, I would want to get in at this point. Again, if you're already holding it, great. Protect your profits. And again, at some point, I would expect that trend to cool off somewhat. And again, Easy Mike, you can, add your comments to this commentary in the video or in our Discord. Any other ideas you have relative to PPH. Thank you again for sharing that with us. Okay, the next two I wanted to look at is with the turmoil in this New York Community Bank. I wanted to see other ways potentially to short regional banks. KRE is long. We have FAC, which is to short the financial sector. But if you look at the composition of FAS and FAZ, they're actually mostly larger banks, larger financial institutions, Visa, MasterCard, etc. So I was looking for something that we could use potentially to short regional banks. So I found this SKRE, and it's I found in that process another one to long regional banks. You could obviously use KRE, but this is a leveraged long. So if you want to play the volatility in the regional banks, we'll take a quick look at SKRE and DPST. So again, I have both of these now in our research tab. So you can see the risk reward profile. Here's the long on region, the 3x leverage long on regional banks. See the risk reward profile on that is pretty good. So if this issue with NYCB turns out to be, just that regional bank, there might be some opportunities to long. You can see here's SKRE, so this is the leverage short on regional banks, and unfortunately the risk reward profile, it's as we'll see, I'll bring up the FinBiz chart. It hasn't been around for very long, so we don't have a lot of history for this one. So again, it's only been around since the beginning of 2024. It doesn't currently have, a real large range, but you can see it's got quite a bit of volatility. So again, if you're very nimble, not risk averse trader, you might want to look at this as an opportunity to trade that volatility in the regional bank. So we'll keep an eye on this. Again, I'd like to have a way, an ETF, to be able to short the regional banks, so that if we do see a overly exuberant recovery and then more issues develop with the commercial real estate with the regional banks, we can take advantage of that opportunity using this SKRE leverage short on regional banks, and then again the inverse, the bounces in regional banks using DPST, which you see it does have a decent risk reward profile. It also has more history, so it's been around longer. Does pay a dividend if you wanted to hold that, although generally holding leveraged ETFs is not something generally recommended. So again, I hope that helps. Additional ways you can long or short specifically regional banks using DPST long, SKRE short. A couple others I wanted to point out. I found one on nickel. So this is a Sprott Nickel Miners ETF. So I hadn't had one previously to trade specifically nickel. So you can see the risk reward profile for it's almost 2. It's got a risk reward ratio of almost 2. So it's almost the type of risk reward I like. Now with EVs, this nickel is one of the primary elements that go into EVs. So you can see it's been beaten down severely with the loss of favor of EVs. Looks like it may have bounced and turned up. Looks like it might get rejected off that upper trend line. This is not optionable. You can see the companies that are involved in nickel mining. So again, I like this as a potential opportunity when we do get a turnaround in the sentiment again in EVs. It's nice to have a way to trade nickel specifically. So we have some that trade lithium, etc. I should look for one on cobalt. We've looked at cobalt as the EV trend as well in the past, but now we've got this NIKL, a way to trade nickel miners, also in our ETF Google Sheet in the research tab. Once this gets over 2, I'll probably move this up to our main ETF sheet I thought about moving it up, but it's pretty attractive as it is. And again, it's the only ETF I know of to trade nickel. Okay, the last category of new ETFs that I've added to our Google Sheet are around Canada. I was listening to a video by Michael Noss. I think he was talking about gold specifically, but he mentioned this ETF EWC, which is iShares Canada ETF. So this is the MSCI Canada ETF index. So I wanted to take a look at that. We didn't previously have any ETFs to trade Canada. So then I went to the ETF database and looked at Canada specifically. We have a video on how you can find ETFs in the ETF database using their screener for a particular country. So you can see that video. Also, we've used it to find ETFs on like Argentina, etc. And I found this other one, which is on the FTSE index for Canada. So I wanted to compare those two. So I added both of those to our research sheet. So now we can see these two ETFs to trade Canada. You see how the risk reward profiles compare the MSCI index versus the FTSE index for Canada. You can see their 52-week risk rewards pretty much the same. Their top to bottom is very close. Looks like the EWC is just a little bit better from a bottom to top standpoint. And from a support resistance standpoint, they look about the same. You can compare the holdings by, again, going to FinViz, looking at the holdings and comparing the holdings. So you see a lot of banks. This one's got Shopify in it. It's heavy in the banks, some natural resources. Compare EWC to FLCA. So again, Bank of Canada, Bank, Shopify, Railroad, Natural Resources, Enbridge. So again, the risk reward profiles of the two look, very similar. Compositions have a lot of overlap. So it's really which one, if you look at the holdings, if you have some preference, or the weightings, etc., that might give you a preference. FLCA is not optionable, and EWC is optionable. So that again might be a determinant in which you pick. You could sell covered calls against EWC, whereas you could not sell covered calls against FLCA. So again, a couple different factors that may cause one to be more preferable to the other, given their risk reward profiles are very similar. Again, from any near-term standpoint, they don't really have the risk-reward profile that we'd like for our main sheet. But again, now we have a couple options to trade Canada long. I didn't see any shorts on Canada. So if anyone knows of an ETF to short Canada, it's always nice to be able to play both directions given the situation that would warrant that. So please let me know if any of you have any experience trading these ETFs, what you think of all of this. I hope that helps. If anyone has a particular ETF you want to look at in our main sheet, if I missed your comment in the chat, please throw it back up there. I apologize. We'll just quickly spin through a few. We talked about all the technology components, so I won't spend any time there. I'll just look for anybody else that's showing up green. Again, you can trade China long with yen, short with yang. Obviously, Bitcoin made a new high over 70K. So again, I'm not interested really in shorting it until after the halving, but if you want to trade the volatility, we have a variety of Bitcoin, cryptocurrency, etc. ETFs in our Google Sheet. Talked about Fang U and Fang D. We'll look at those again tomorrow. the overall financial sector. So FAZ is short on financials, FAS long. We'll talk about that tomorrow. We've got, a variety of ETFs to trade gold miners, silver miners. So that's a short on gold miners. So again, gold could continue to run up, but if you're nimble, not risk averse, you can see which of these ETFs you might want to, short gold. We've had several discussions recently. These tend to are lagging. So even though gold hit a new high, these shorts haven't really hit their low. So I would definitely keep an eye on the 52-week low. So there's dust is a gold miner's bear, but it's not at its 52-week low. Here's GDXD. So again, it's not at its 52-week low. So again, I would keep an eye on, when do those bottom out and turn back up. If you want to trade long, GDXU, I think several of our BeachBum traders got into GDXU and are making some nice money with that. I think others are in GDXJ, which is the miner, and I think we have that in our research tab. So GDXJ, you can see in the research tab, which is the junior miners. Now, all the miners, the small miners, are also lagging, so those might be opportunities going forward. Talked about the run in the XLI. We're currently short with SIJ, waiting for that correction. Talked about natural gas, so long with oil or UNG or UNL, short with cold. If you want to trade, the volatility in NVIDIA, we have several single stock ETFs to long or short NVIDIA. I know the Crow was mentioning NVDQ, I believe, and you can see that one in our research tab. So that's a short on NVIDIA. And again, you can see the risk reward profile. It's a T-Rex 2x inverse, so it's a short 2x leveraged short on NVIDIA. And again, you can watch the risk reward profile of that in our research tab. Oil, got long and short. So again, I won't belabor most of those. Again, you can find whatever topic, category, commodity, etc. Just do a find in the ETFs tab. If you don't find it there, you can check the research tab. And then again, tomorrow, here's Tesla. Again, we have a variety of single stock ETFs to long or short, several of the major single stocks. We'll talk about wheat tomorrow. Talked about YCL, which is the long on the yen. And we have the Japan ETFs as well, long or short. And again, we trade the Nikkei, so long. You can see it's very close to its 52-week high, but came down. Short again. And we'll talk about those in more detail again tomorrow. And again, if you'd like us to do research on any ETFs, you can put those in the comments of our video. You can also always contact us in our Discord. We're BeachBum Trading in our Discord, all lowercase, all one word, no other characters or numbers, pounds, etc. So again, you can let us know if you'd like us to do research. And please, for those where I'm sometimes in the live chats on other shows, please put your requests to look at ETFs. Ideally in our Discord. Again, tag us in the Discord or in the comments to one of our videos. I need to spend more time on our systems and community, and most of the time I'm probably not going to see your request in a chat on another channel. So again, if you would please put them in our Discord, put them in a comment under a video, and then I can add those to our agenda to look at in our next live stream, or maybe even comment back in the Discord. So just very quickly, I know I'm running long today, which is okay. I wanted to provide those additional ETFs for categories and didn't have a whole lot of other topics to discuss in terms of trends. We talked about, the market's springing forward, exuberant run. I gave my opinion on I don't see anything changing unless we get a black swan type of event, which I don't foresee, as no one could foresee a black swan event. So I think we're going to continue to trend upward until we get, some kind of black swan event. Just a forewarning, when we might get that downturn, I think that's the sell in May and go away crowd, that maybe once we get to May, we may see a downturn because of that sell in May and go away crowd. We may get a little bit of a volatility due to the Fed. There's some people that still think there's going to be a cut in March. Fed's already told you, ain't going to happen, no cut in March. But that might cause a little bit of a correction due to those delusional expectations. So again, we've been discussing, how to make money trading in March, how to make money trading in March of 2024, and you can listen to those previous discussions, how markets perform in March, best performing sectors and industries in March, and also as we wrap up the winter, head into the spring, you can hear those strategies for making money trading in the winter. Again, I think, sector rotation in and out of the Magnificent Seven, in and out of AI stocks. Again, the AI FOMO continues to rage. Crypto FOMO continues to rage. Those are going to be the trends. They're going to buy the dip in those. And then, profit taking and corrections, and being nimble and taking advantage of those opportunities, I think, is the name of the game right now. So again, tomorrow we'll talk about dividend payers. We'll also talk about additional option strategies, additional ways you can make money. So I hope that helps. If anyone has any last minute comments or questions, again, please put them in the comments of this video, or again, contact us in our Discord. If I missed your comment, again, please put them in the Discord or under this video. Again, I can't always go back in the chat and pick up your comments. So again, I greatly appreciate it if you put it in the comments of the video or in our Discord, or you can contact us via any of our social media sites. You can find links to all of our social media sites in the links section of our homepage, which is beachbumtrading.com, bum without the U. So again, please forward your comments in any of those ways, any of your questions, and any recommendations for improvement. We'd love to hear your feedback. What would you like to see more, less of in these weekly trading game plans and any of our videos? How can we improve, our weekly trading game plans, any of our videos, our tools, resources, community, etc. I really, I need your feedback to know, where to spend time and effort to add more value for all of our BeachBum traders. So, and I hope you all come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern time, for part 2 of our weekly trading game plan. Don't forget to set your clocks forward, spring forward for daylight savings, or you'll be late for part 2, which again will be the new 10 a.m. Eastern time. And we'll take all this data from our market analysis, trade ideas, trade strategies, and we'll use it to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also again go over dividend payers and option strategies tomorrow. So again, hope to see you all again tomorrow. Thank you to everyone that participated in the live chat, and to everyone who's watching after the fact. I hope you'll smash the like button on this video. Hopefully help us try to get the YouTube algorithm to help share our content with additional traders around the world. We'd greatly appreciate it if you directly share our content with your fellow traders. repost our content on X / former Twitter, etc. We're striving to grow our community for the benefit of all of our fellow beach bum traders, and we certainly need and greatly appreciate your help. And if you have recommendations along those lines, we'd love to hear that as well. So again, we look forward to seeing you again tomorrow, and have a great day. Thank you.